Hello and welcome to Gold and Silver Assets. It's Sunday the 26th of January 2020. So it's been another sideways trading week for gold and silver prices, and trading conditions at the moment are quite tricky with no high conviction, high probability chart setups. In the coming week we do have a few events coming up, including the FOMC meeting, and so we're likely to see a bit of volatility in the gold and silver prices coming up. Let's look at gold price in US dollars on the weekly scale, and here I've drawn a band of overhead resistance which dates back from the 2012 to 2013 period. The lower band is at the 1558 gold price, and we can see that recently we hit that twice before being rejected, and that led to the correction that we saw. We then had another go at it and actually broke through there to reach the second band, which is at 1620 US dollar level. And the question is, can we break through that? Now, first of all, looking at the chart on larger scale, we still have to assume that we are in an uptrend. We've got higher highs and we've got higher lows. And so our overall thesis has to remain bullish unless we get signals that change our mind. Let's have a closer look, still on the weekly scale, at the recent price action. Now, a couple of weeks ago we spoke about this candle here, which had a long upper wick, and so this was a shooting star. And this was thought to be a possible danger signal, but in order for that to confirm, we would have needed to see a red candle closing below the lower end of the shooting star, and we didn't get that. Instead, we had a red candle, but it was a hammer or pin bar, and that's a bullish sign. And this was confirmed this week by being followed up with a green candle. And so, until we get any reversal signs, we have to assume that we are in a short-term uptrend here. However, the problem with these pin bars is that it doesn't really give us an upside target. So the next thing that we can look at is by joining some of the lows to draw this line. I then cloned this line and moved it up here, and that seems to join up with previous highs quite nicely. We can also see that we've got a confluence of resistance over here. So we've got that upper line at 1620 roughly, and that coincides with this upper trend line of the channel. And so this leads me to think that this may be our next upside target for gold. We seem to have support here at 1558 as well. So if we do drop, I think 1558 provides reasonable support in the short term, and I think we're going to give the 1600 to 1620 gold price range a good stab. Now the question is how that price action occurs. Are we going to have a similar movement where we get a spike up and then a spike back down again? And that would suggest that there is a risk of further correction later on. However, if we get a strong green bar that stays up at these levels, then I would expect some mild consolidation before moving further up. But be aware we are at the top of this channel at the moment. Let's move on to the gold price on the daily scale, and here we can see that we may be in a short-term channel here. So if we get price moving further up beyond the 1580 level, then I would expect a stab at this level here. And I think that's likely, particularly since the height of this channel matches the upside target over here. The big question is actually what happens once we get there. I'm expecting rejection because it is strong overhead resistance, and so we'll see what happens after that. Let's move on to silver in US dollars on the weekly scale. And we did overcome some strong overhead resistance. I've drawn this line here roughly, and this was tested multiple times over the years, and we broke out of that in 2019 quite decisively. But of course we do still have some overhead resistance with this black line over here, and so that would give us resistance at the $19.50 range. We also have a narrowing trading range, if you note here, and so this is going to give silver a lot of power to move to the upside when it eventually does, and I think it's a question of when rather than if. I think that as soon as we break this overhead resistance here, there's very little in the way of silver moving to at least the $28 range, and this narrowing trading range is what's going to give it the power to do that. Let's have a look at silver in US dollars on the daily scale. And again, we've spoken of this channel here that we seem to be forming, and there is still room for more upside moves. So in the first instance, I'd be looking at the $18.70 area here, which is the upper end of this channel. And we need to see what happens when it gets to this channel. Previously, we had a very strong rejection candle here, and again here we had a large wick. If we can break through this, I think we have the potential to reach $19.50, but again, it just depends what kind of reaction we get there. If we get a strong red candle, then we'd be looking for a correction possibly to $17.50 at least. But we may just get a mild rejection, in which case we may consolidate in this area before shooting up further and overcoming that overhead resistance. So things are looking bright for gold and silver, but only in the short term. Remember that this is pretty strong overhead resistance, and we need to see how price reacts at those upside target points. Thanks for listening, and see you next week. Bye.